upload. Alrighty. All right. For those that don't know me, my name is Toby. I do a lot of creative work in real estate and I help clients with residential and commercial properties. I leverage social media and Facebook ads to help my clients sell houses as quickly as possible. And the market has been turning over the last 2 months, I believe, from what I'm seeing. I'm excited to be here with you guys today, and I hope you guys can learn a few things about the state of the economy, where we are, and more importantly, feel empowered to take action. Um, to do something or to make a move, whether it's refinancing or whether it's buying or whether it's educating yourself on real estate or whether it's just giving you confidence so you're not as nervous about what's going to happen next because you kind of know what's going on. So I'm hoping you guys can leave here with something. All right. About my background, I'm a full-time realtor. I'm also a CPA with corporate background experience in finance and accounting. And while I was working my full-time job, I was also investing in real estate. I got into my first investment, my first flip in 2017, and I did some rehabs. I actually got my real estate license to save money as an investor. So that's a little bit about my real estate background. But since then, I've sold over 100 houses and I have my own personal investments also. On a personal note, I'm happily married. Blessed to be called a dad. I have a boy that is 2 years old in this January. My daughter is actually 3 months old today. So I feel very blessed to be able to see them. Um, Interesting fact about me, I've ran over 14 half marathons and been to over 15 countries. I'm trying to get to 40 countries. I'm going to South Africa next month, maybe Kenya, and hoping to go to more countries this year. I'm always super busy with work, but I try to make time to travel. So, all right. So today we'll be discussing the items above and how it relates to interest rate, lending, housing demand, employment, tariffs, prices. I know it seems like almost every other day there's a policy change. So that's something that we also need to think about as investors in this market, just knowing that there's a little bit more changes. We are hoping that as the year progresses is less of those changes because you just have to hope that most dramatic changes are being made in the first 1 or 1.5 years, right? But that's something we have to keep watching. But my hope is that, we can get a sense of what's going on in the marketplace and the options available to us and the strategies that we can utilize to make more confident decisions as we move forward this year. So we're first going to talk about the current economic conditions. Um, right now, the economy 2026 is described as being stable after a few years of volatility. And I'm going to show you a graph to show what I'm talking about. But interest rates really went down so quickly and really went up so quickly. But over the last year, it's been going down but not as volatile, just like steady down, steady up, which is what you want in a normal market so people can make strong decisions based on the predictability of the marketplace and it's not too up or too down, right? GDP growth is moderate but steady with less dramatic swings than in previous years. The consumer confidence is rebuilding just because interest rate is going down. So housing is more affordable for qualified buyers. I'm seeing more investors in the marketplace using more creative financing to purchase real estate. and some people just buying it outright with cash. But obviously, a lot of negotiation going on because interest rates are high, and sellers are coming down with prices across the board, whether it's new build or if it's resale. So it's definitely a great time to negotiate. Depending on the kind of deal you have, it might be a good time to buy. So key sectors like um, technology, healthcare, logistics are strong, and overall there's an economic growth. So this year is seen as more of as a year that's going to be stable. Obviously, we have to keep watching inflation, interest rates, and the employment trends overall. I mean, after peaking, inflation is now stabilizing. That's why I see this year as a big stabilizing year. Obviously, knocking your woods on changes in economic policies and tariffs. But generally, the economy itself, independent of all those external changes, is being seen as more stable and more predictable, which is good in a way, right? So at least you know what you're dealing with and you can act on it. This Federal Reserve basically has told us that interest rates, the new normal is a little bit high, which is right now we're around at 6%. Um, we do think it's going to come down a little bit this year, but maybe 5.5. Nobody's expecting anything dramatic. So that's why I say the new normal is kind of high because some of us got used to the low 2%. Um, and that's just not normal anymore. And nobody's indicating that that's going to be normal in the next few years. Um, Employment trend is still holding up generally. The market is a little bit cooler. It's not as active as it was 2 years ago. There's a little more layoff. Employers are hiring slower because they're thinking, all right, should we have these jobs in the US? Should we have these jobs outside the country? Obviously, there's a lot going on with AI and tariffs impacting, the employment market. So all that is settling. So we'll see how employment goes this year, but generally is expected to be a little bit better. Um, Nobody's expecting anything drastic. I mean, people also believe AI is going to create more jobs, and people are also going to lose jobs with AI. So we just have to hope it offsets in the positive directions. And when it offsets, those jobs are here in the US, since I'm assuming most of us are here in the US. Economic shifts and impact on real estate. I think I talked about most of that already. Um, but I do think the only thing I would say about that is I'm seeing more buyers. I mean, some people are holding and they're not buying. But what I'm noticing is that life changes trumps economic opportunities. If a house is so small for a family and they need a space, they need a space, right? Or if people need to sell because they cannot afford it or they lose their job, or there's a divorce, there's something going on, they just need to sell, right? Not everybody has the luxury to be holding and waiting. And most people that need to make real estate decisions, they literally need to make a decision. So I think why a lot of people are waiting, people that have options are waiting, but there's still a lot of activity in the marketplace. And I think the leverage you have right now is that you can negotiate and you can get a good price because how prices are expected to go up when interest rate goes down. As I said, existing homes have improved. It was so weird. Last quarter, October was slow for my listings. November was slow for my listings. And December, about four of my listings just sold. And if you know about real estate seasonality, December is supposed to be a slow month for us because you have Christmas, everybody's just busy with family and events, and it's cold. I know this December was not that cold. Felt like spring on December 25, but typically people are traveling and people don't buy or sell houses in December. But this December, there was actually higher than expected activity, not just for me, but for a lot of my realtor friends. So we do see some momentum in the marketplace as we get into 2026. And I will attribute that to just lower interest rate and more stability and people coming to accept the new normal. See, economies are expecting slower growth. Yeah, cooling inflation, we kind of talked about that. The other thing I mentioned is about the market, national and local market. Um, it's important to know about your market. Not every, I mean, markets that went up very quickly in 2020, 2021 due to low interest rate, they're also having the highest amount of adjustments with pricing. So there's more stability with markets in West Coast, East Coast because they didn't go as high as in the Midwest, in Texas. So there's not a lot of adjustment or correction in those areas. But in Texas, Austin, Dallas, we're seeing a little bit more. See, it is a weird market. So not everything is equal across the board. So it's important to know your local market. But Dallas continues to lead the country, in my opinion, as the place with more economic activity. You have more companies moving here. Whether it's JP Morgan or Texas Instrument, expanding Sherman, or Universal Studio. So most of us on this call live in Dallas, so I think we're in a great place to invest, and we're definitely in the market that is going to boom in the future. So talked about three main drivers to consider in 2026 and just the strategies you want to think about. We talked about the current interest rate. Um, we do expect interest rate to keep going down, but slightly, not as dramatic. Um, so some people that bought houses in 2024 when interest rate was close to 7%, this might be a good time to start looking into refinancing. I know some people, ARM is becoming more popular again. It started becoming more popular over the last 3 years, or 4 years. And basically, they give you a time frame that, of what to expect with interest rate, maybe for 4 to 5 years or 3 years, depending on the arm you get. And after that, your interest rate goes up and down just based on the market. So I would advise if you got an arm, maybe a good time to start looking into refinancing, to have more fixed. Or even if you got, because some people they got their house at, 4.5, but now it's 7.5 or 8.5, and it might just get worse. So, talk to me, talk to your lender, um, and it's okay to refinance twice, right? Some people are like, okay, let me refinance when it's very, very low, but you could refinance now if the numbers are going to make your life better. And if it goes low again, you can refinance. Because again, inflation could go either direction because tariffs are inflationary in nature. So um, if you're saving significant money by refinancing, I'm telling my friends or I'm calling all my clients that got houses around 2023, 2024, 2025 to take a look at refinance. Um, Let me see. So we talked about strategies to maximize affordability. Yeah, a huge part of that is interest. Um, and if you have cash, you can use that to negotiate a great deal. Most builders and sellers are going to give you more concession if you're a cash buyer. And so yeah, that's how investors are increasing their cash flow, creative financing, and using cash, right? So this is what has been going on with interest rate. So how we went down from 2018 to 2020, 2021 is not normal. It doesn't typically go down like that. And how it went up to is not normal. But the movement you see in from 2023 to 24, 2024 to 25, 2025 to 2026 is more normal. So that's what we keep expecting, more like a slower pace kind of movement. And but nobody's expecting it to go back to 30% or 2.5 anytime soon, except something crazy happens in the world again. So yeah, there's still opportunities in the marketplaces. In the suburbs, like I said, there's expected to be a lot of development over here in McKinney, the building National Airport. Um, still a lot of people moving to Texas. There's a lot of movement generally to move to the Midwest all across the country. So when you're investing, you want to be aware of where are the infrastructures, where are the great schools, and what community amenities are there. Is there like a lake, a river, things that attract people for fun? You want to think about, is it investment friendly? Obviously, multifamily is always something to consider when thinking about investment friendly real estate. There are not as many out there, and sometimes their numbers don't work. Especially if you're putting 20% down. But that's definitely something you want to look at. Right now, I'm seeing higher demand in single family home, and most of my investors are focusing on longer term appreciation with the price of their house and short-term cash flow, right? Which is a right way to think about it. And they're using any financing strategy that they can to lower their monthly payments to the extent that the rent is covering it. Um, so single family is mostly, you have to think about it from a long-term perspective, right? So long-term buy and hold for appreciation and rental income. For short term, you want more strategic flips and more immediate return on your ROI. So the most important thing is to know what you're doing. Say, okay, am I trying to do long term or am I trying to do short term? And just know what your end goal is. So building wealth through real estate, unlike the stock market, we deal with volatility. Real estate is like a savings account and it compounds over time. Um, you aren't just making money one way, you're making money by cash flowing, appreciation, you're paying down your loan, and somebody's doing all that for you, right? And you're also having tax savings. If you really understand how to use depreciation, then you're having tax savings. Hey, Mr. Lobbs, good to see you. Actually, I just noticed I'm not on camera. So let me come on camera. So yeah. So we were talking about cash flow versus appreciation mindset, right? But you get both of that in real estate, right? So we are appreciating, your value is increasing over time. And generally, t over time, your assets are going to increase in value. I just talked about leveraging tax advantages, depreciation, 1031. That's something you can definitely do in real estate, invest in one property, then move the money to invest in another property. Obviously, there's time limits and things like that you have to consider. Um, but that's how you build wealth in real estate, right? I'm going through this fast, but if you have any question, we will talk at the end on that, right? So, how can you position yourself for success in real estate? Financial readiness is always good. Have a great credit. And if you have bad credit, talk to me. I definitely recommend you talk to a credit repair person. Um, Credit is interesting. It's almost like, so what credit repairers do, it's almost like you're caught for over speeding, and the cop stops you and gives you a ticket, right? Um, Now, if you go to court for that ticket and the cops still don't show up, then your case is dismissed. All right. And that's kind of what credit repairers do, is like they show up for you And sometimes the cops just might not be there and they may cancel it because there's a lot of rules about what they can do before something negatively impacts your credit that a lot of companies don't even do, right? So um, they're supposed to follow up a number of times. There's a lot of guidelines. So what a credit repair company does is check with them, say, okay, did you actually follow this guideline and all that, right? Because a lot of companies also make mistakes. So if you have a bad credit, make sure you're getting help. The answer is not always pay up the money. Sometimes you can protest some things and you may not need to pay it up. It's all about having the right information. Um, Understand the local market. Real estate is not one national market. What is happening in California is different from what is happening in Texas. Be conservative when you're buying. Conservative with your vacancy rates. If vacancy rate is 5%, you can make yours 10%. Schools are a big driver when it comes to rental. So look at school. Obviously, the better the school, the higher the cost of investment. So that's something you always have to balance out. Know where the infrastructure is. In McKinney, for example, they're building a national airport. You have Texas Instrument expanding in Sherman. Goldman Sachs is coming to town, Universal Studio, JP Morgan. The World Cup is is during summer in Arlington. They're building new transit lines, major corporate headquarters coming. So things like that. You want to know what is going on in the marketplace. And I also want to know the laws. Talk to a realtor that knows the laws when it comes to renting, how to do that. Um, and also have a great team, have an investor friendly agent, a lender that you can trust, a property manager, and, a CPA, a tax strategist. All right. The risk to watch this year is the tariffs keeps going up and down. So that's something we should all keep an eye on because that may change a lot, right? Um, Geopolitical friction. Um, so head of states have been taken. So we'll see how that impacts this year. And so that's something, policy changes are more aggressive and they're more dramatic. And even the Fed's chairman is being, I think he's being sued or something like that. So the Fed's chairman might change. Who knows? So it's supposed to be a stable year, uh, but a lot could change also. But those are things you want to look at and you want to ask yourself, how does this impact my economics, my personal economics, and what can I do about it? You don't want to get all caught up in the news cycle. It could be very stressful. But when you ask yourself, okay, what is this telling me? And how can I make a move? Then it empowers you and it's not all sad or overexciting. I think we talked about key takeaways already. If you want to invest, start small, scale strategically. Don't buy five properties at a time. If it's your first property, buy one small one, understand it, look at your numbers, take a step back, ask yourself, what have I learned? What can I do better? And ask yourself those questions. Um, Then you can either leverage your equity to buy the second one, or you could leave the equity in the house, right? So have a long-term goal. In 10 years, I want to have 10 houses, for example, right? But it's better for you to go one at a time. Um, don't Everybody's pace is different. Some people get a lot, but I'm more of, I mean, I have a couple of properties, about seven, but everything was go one every 2 years. I buy one, and every one of them I made some mistakes. So it's okay to make little mistakes here and there. It's just life. But you learn from it and it makes you better. It's definitely better than no action at all, right? Um, and just commit yourself to educating yourself. Like be a student of the market. You don't have to leave that to your stockbroker, your financial advisor alone, or your real estate expert. Like, just try to really understand. what's going on. And if you have additional questions, obviously I'm always here to talk to you about it and give you my insights. All right. But yeah, I will open it up for questions and answers. Questions. Any question?
Hey, Toby, I don't have any questions, but just want to say thank you for sharing this knowledge. It's really, great. Learned a lot from this.
All
Thank you.
right. Thanks. Um,
I have a question.
yes.
So what would you say is the because I'm still trying to be patient with my own acquisition, right?
Yeah.
And you said something about the market multi-family properties. I want to know like what would you say the prospects for those are? And I'm not confined to a specific area. I'm talking about like the entire Dallas, for example. I'm just curious to know. I'm looking to make an acquisition maybe sometime early next year.
Okay.
But I want to know what your thoughts are because I heard that's like the best way for you to get your foot in the door when it comes to real estate and stuff.
Yeah, you have some advantages. Because last time I checked, you're not married, right? So,
Way to
so
push it
the
out
reason why I
there.
said that,
Way to push it out there. But yeah, I'm still I'm a bit flexible. So yes.
yes, yes. The reason why I said that is that you don't have to worry about, school district as much. Um, you just, I mean, you don't want to buy in a bad area, but you don't ha the area doesn't have to be all, prim and proper and all that. But obviously it has to be safe, right? Um, so yeah, but there is opportunities for multifamily. I was actually looking at one in Blue Ridge 2 weeks ago. It's a 12 unit multifamily. It's going for like 2.5 million. Um, you know, about 200K. Um, you know, three, 4 beds, 2.5 bath. It was built in 2021. The owner, the wife had stroke and they're just trying to sell off. And
Oh
they're actually
wow.
very motivated, right? But
Okay.
2.5 million is just a lot of money, right? But some people are thinking about coming together, doing some syndication and buying that. But to answer
Mm-hmm.
your questions, yes, there is opportunities for multifamily purchase. There are not as many because one, they're not building a lot of it, and the owners are not selling a lot of it.
Yeah.
And also because of zoning, um, the city does not zone a large part of our area for multifamily. Most areas zone for either single family or commercial real estate. But yeah, but they are there. The question is, does the number make sense for a lot of investors, right? And because
Yeah.
of the high interest rate for investors, sometimes those numbers are not making sense. But part of why I say you have an advantage is because you could do a house hack and you could live in one side and you could, especially if it's 4 units or less, and you could use an FHA loan, 3.5% down, 5% down, and you could purchase this house and you can have a primary homeowner interest rate, which is going to help your cash flow significantly compared to an investor.
Mm.
So yeah, there are prospects there. I mean, there's some in Richardson. I saw a duplex in Plano recently. But there's more in the suburb like Sherman, Denison, Blue Ridge, like way in the suburbs. You see that? There's some in Dallas, but their numbers typically when we've looked at them are not as great.
Yeah.
I know how Dallas is. It's like one area is like $1 million house, and the next house you see people doing crack and stuff they should not do. So it's kind of like a
Mm-hmm.
weird, weird space over there. So when it comes to Dallas, you just have literally have to drive there. It's by street. You just cannot say, "Hey, this whole place." Right? But yes, there's definitely opportunity. So you just keep saving up and make sure your credit is great. And And yeah, I just keep looking at what the market is saying. And sometimes some sellers are just more motivated. It's just sometimes about timing. If you meet a very
Yeah.
motivated seller, like the seller I met a few weeks ago, and
Mhm.
because many of them they are making money on it because they got it a while ago when interest rate was low, or they've paid for it cash. So if their life situation is making them aggressive, you could get lucky. But the short answer is there's not a lot of them, but there are definitely opportunities for you.
Yeah, I guess patience is the name of the game then. I just have to be patient, like you said, save up. And also I was thinking like what are the
Yeah,
prospects
just to
for
cut you real quick, patience and activity. So when you see something, you got to ask because you don't know if that one is the motivated seller. You know what I mean?
Hmm.
Um, but yeah, go ahead.
I was gonna say like what are the prospects for seller financing and like some creative financing thing? Like you don't have to go through the banks or whatever you like. There should be something that can also significantly put you in the right position to make an acquisition.
Yeah, it's there. But most of these multifamily sellers, um, money is not a problem for them. And they are selling because they don't want to have to deal with the property again.
Mm,
So when we've asked about the seller financing options, they don't usually like it because one, they just feel like that's for people that have issues, even though it's really not. And a seller can use it to their advantage if they can have a great interest rate and figure out a favorable balloon payment plan and all that. Um, but obviously, it's just between the seller and the buyer, right? But many of them, they just want to sell it hands off and not have to think about it. So, I mean, the ones I've done that we brought that up, we've been unsuccessful to get that, just because they just want to deal with it. Even after we put clauses like, hey, if my buyer fails to make some of the balloon payments, the house will go back to them to make it more attractive. But they just like, no, they just want a clean sell, just don't want to think about it. So, but if you meet someone that is more motivated because of life circumstances, um, but but usually what I've seen is the question is the cash you want to put down, the initial cash you want to put down for your seller finance, is it significant enough? All right. So if you have a property that is $1 million and you want to do seller finance and make some monthly payment over time, the first payment usually they want a lot. Like they want you to put like 250K down, right? Um, and usually people don't have that kind of money. Maybe people have 80K down, 100K down. So if you put 250K down or 25%, something like that of the house, then maybe because usually they need that money to invest in something, right? So that's usually why they don't do it. But it's possible. I've seen it done, just not recently. Any
okay.
other
No,
question?
no, Wala. Thank you, bro.
Oh, you're welcome. Mr. Francis, any thoughts?
Yeah, nothing really, but it's interesting that we are connecting. I'm particularly interested in exploring real estate, not as an but both as an investment and a tax planning strategy. Many of my clients, I know a lot of tax planning strategies that you can use to offset your W-2 income, which
Okay.
are applicable to most of my clients. They don't really know. They thought that they want to acquire real estate based on need, but not
Mm,
on need, but for fulfilling tax planning purposes. They make a lot of money and they want to, push that money, direct those income into building wealth. So that is the way I'll be looking at it. And then something you mentioned about, I know for tax planning purpose, they treat a short-term renter as active income, unlike long-term renter. So all those um, um, all those are the areas I'm still researching to find a good solution. But real estate is the in thing, and now still love us to connect further. Also, I have some international clients which I'm trying to, like in Nigeria, they are mostly like Nigerian content creators now. They make a lot of money in Nigeria making content, and I'm trying to really market to them why they can own a US entity. Having a US entity so that though they are based in Nigeria, but they have a US entity to register with those platforms that they make money. Now, when they make money, so that instead of the government, the platform taking 30% as withholding tax on their income. So they're not going to they don't go to withhold their taxes anymore. But then they'll help them file their taxes. But the problem again is that when they make too much money, many of them make over 20 to 50,000 or more every month in Nigeria. So now taking those money back to Nigeria will be another problem because of the Nigeria tax. So we want to develop it. Now you have those money. Now you can actually invest those money in the US, which is the US real estate market or any other form of asset. And so that's it. So the asset will be basically be real estate anyway. So that they'll be very happy about that. So those are the area I'm looking at. And I'm actually thinking about how I can collaborate with you in delivering those kind of unique solutions if they make
Okay.
sense.
Oh
Yeah.
yeah. You raise a lot of good points, and yeah, you could text me. We can meet up for coffee this week and talk one
Yeah.
on one. But yes, definitely I agree. Real estate is a good way um for taxes because you can have depreciation expense and
Yeah.
apply it to your income.
Mhm.
So when you have lower income, that means you have a lower income basis to tax.
Yeah.
You could look into cost segregation study.
Exactly.
So instead of just doing like a straight line depreciation basis, you could literally break down based on asset class of a house, and
Yeah.
you could depreciate more on the short term, and that
Yeah.
also increases your expenses and helps out. But you want to make sure you have the LLC the right way. Just because you have an LLC does not mean your property is in the LLC. So
Okay.
you want to make sure it's recorded the right way, and you want to have good experts around you. But
Okay.
yeah, I have done some purchases for people in Nigeria. Um, and yeah, the sometimes the signing and the title part is a little bit tricky. So I just
Mm.
encourage them to make sure that they're closing the US, especially if they don't have a social security. There's all the steps they have to take to close on the property. But yeah, I would definitely like to talk to you more.
For
You
sure.
definitely raised some good points. I think we can definitely work together or maybe do more trainings or seminars together to help people.
Okay. Sure. Sure. Thank you very much for the opportunity.
You're welcome. Any other question, guys? All right. For people that have real estate investments, you may want to look at that cost segregation analysis. You get more out of it if you're doing short-term real estate. ABM, what is short-term? Less than 30 days. Or you're just a more active partner. Um, I would say. I think the way the rules work kind of favors you more that way. Um, and if you have a real estate investment, you want to make sure you incorporate in an LLC because if anything happens, you don't want to be personally liable. Your first line of defense is your landlord insurance. Then the second line of defense is going to be your LLC. If you don't have an LLC, then they could come after you, your family, money, and all this. So you don't want that. So you want to make sure you have a LLC, and I can send you steps on how to do that, and I can send you a lawyer that could help you draft the paperwork. And for people that are trying to buy the first time, you know, just a step at a time, right? Just because it feels like a lot does not mean it's a lot. And that's why you don't do it yourself, right? Some people reach out to me in the process after they found their house. I'm like, why? We should just talk about this from the beginning. Like, that's what I'm here for, all right? Like, if you want to talk to Francis Ibukunle about taxes, like, there's nothing, you could start talking about 2026 taxes now, so you could plan, right? It doesn't have to be when it's tax return time. You're like, what should I have done, right? So you want to be proactive. There's nothing wrong with getting more information, all right? Any other question? Mr. Lobbs, is Dr. Lobbs there?
Yes, sir. How you doing?
I'm doing great. So Dr. Lobbs does home health consultancy. So some of my clients use their houses to rent long term. Some people use it for short term rent, but some people in the medical field use it for home health. And you don't have to be in the medical field to use it for home health. It just happens that people that are in the medical field, they tend to know a little bit more about that business. So what Mr. Loves does is it does consulting for people that want to use their home for elderly care or things like that. Do you want to talk about that?
Well, first of all, thank you very much for this webinar. It's really good that you get to tell people about real estate investment and how they can manage their wealth because real estate investment is wealth, right?
Yep.
Good. So thank you very much for this. And we should be doing more of this and educate our people about how to go about doing businesses like this. So what we basically do is Toby gets you the property. We want to turn that property into cash flow. So if you have a house and you're thinking of, okay, what kind of business I want to do in this house? Well, we can help you set up a business in the healthcare sector, be it medical or non-medical. And you don't actually need to be a nurse or a doctor. You don't even need to, if you don't want to own the house, that's fine. But some landlords will not let you to do remodification in the house if you don't own it. So what we do is we help you set up your license. And first of all, we even start with a business registration because your name matters a lot. We set up your name, company registration. We help you with your licensing. We help you with Medicaid because you need that's where you're going to be getting clients. And we help you with one of the most important part, which is marketing. Because if you have a home care agency, you need to also market it. You don't need to fold your arms and wait for Medicaid or private insurance companies or social workers to send you clients. We want to make sure we market you on the ground level, online level, and also get to connect you with the right agencies and individuals that are going to be giving you clients. So that way, when we set up your agency for you, your agency is making money and you're growing. So it's kind of like we setting you up for success. So that's what we do. And when I say medical and non-medical, I mean medical means that you need to administer medications and you need to administer treatment as well. So you don't need to be a doctor, you don't need to be a nurse. You can hire a nurse and open up a medical home care agency, and you can be the general administrator. Then the nurse will have to take care of anything that has to do with treatments and medications and all of those. And when I mean medical, I'm talking about hospice, home health, assisted living, treatment centers. Treatment center is very broad, and the government is putting out, I think this year, 2025, they put out about $10 billion for people who owns treatment centers and all of those because they want people to be able to have access to the right treatment. Then when I talk about the non-medical, non-medical has to do with you owning an agency that hires caregivers to send caregivers to people's home for in-home supportive care. And you can be making money by just doing that. And you can have it in multiple locations. You can have it in one location. And what you do is companionship, you offer support, you you do medication reminder, meal prep, concierge. You can even offer transportation, non-emergency medical transportation to them. and you take them to their doctor's appointment and bring them back. So it's kind of like more of support. So that's the non-medical. So that's what we basically do. And we help people to write their policy and procedure as well, which is one of the most important key factor for setting up a home care agency, because the government or the state where you reside wants to make sure that the agency you're setting up, you are running that agency based on the set down rules and regulations being made by the state to run the agency the right way. So that's basically
Awesome.
what we do. Thank you so much.
Awesome. Awesome. Yeah, thanks, Mr. Lobbs.
Can you
You
share
know,
your
that
contact?
yes. Let me see. Do you want to, Mr. Lobbs, do you want to send your contact on the chat? Um, I think some people might need it.
Yeah.
But
Yes.
yeah, but I like what he said, because I mean the whole point, part of why I do this webinar is I'm passionate about educating people, but also, there's a saying in my where I come from is like, um, it's not just one way you to enter markets, right? There's so many ways we can be successful, right? Because some people are like, oh, I don't want to invest in real estate because I don't want to deal with tenants. Well, you could do Airbnb. Well, you could do healthcare. You could get somebody to help you. You could do commercial real estate, a more active business. You could do daycare. There's a lot that can be done, right? And the whole point of this meeting is to open your mind, listen to different ideas, and if there's anyone that you resonate with, ask questions. And I don't have all the answers, but I have people around me that I can lead you to that can help you, right? So yeah, but again, thanks everybody for joining. If any more question for, oh, Dami has one more question. Okay.
Yes, Toby. Thank you so much.
All right,
Again,
sure.
I'm trying to get to Dr. Loves to just know, like, for someone that's an absolute newbie, what would you say are the requirements to get into that space? Because healthcare is also something I'm interested in, like renting in that space as well. I'm just curious to know if it's something I have to get with you out of this call, then I'll surely do that. But I just want to know, like, if you could run like a brief overview of what the requirements are, set up the LLC. That I think you said you could help with that as well, or something like that. So I just want to know if you could just do a quick run through.
Okay, so when it has to do with, thank you for the question. So when it has to do with setting up the agency, like I said, it depends on which one you want to do. If you want to do the medical, there's a different requirement for that. And under the medical, there are different types. So if you want to do the non-medical, yeah, even Mr. Toby, I forgot to mention this. Even those people that you get houses for, they can be giving out that house for shared living. Now, shared living means you're renting out your house to nurses, travel nurses, and IT professionals. You're renting out your houses to, there's a company they call these dish companies that they go around testing cell phone towers all over the US, that they send their workers to different places. Like they call them
Yes.
drive test engineers. There's one company they call Teleward. You can also get contracted with Teleward and offer your house
And
to
and
their
and also,
staff.
just interrupt quickly, there's a website called Furnish Finder. That's a web. So people know a lot about short-term and long-term rents, but they don't know enough about mid-term rents, right? Which is what Mr. Lobb is talking about. Travel nurses, even corporate insurance. If there's a fire or there's a mold exposure in somebody's house, they need to house somebody for a couple of months. And Furnish Finder is really not like Airbnb. It's just somewhere that people go to, and it's for midterm rent, 2, 3 months, or sometimes some construction guys come to town and they need them for 6 months, or some IT guys that are working on some migration. Or you could rent it to a nurse and things like that. But there's definitely a space for midterm rent. But continue. And we have a few more
Yes,
minutes. But yeah,
yes,
so let's
that's
wrap up.
fine.
But go ahead.
And we have what is called independent living, which is also booming as well. Independent living means that you're housing people in your house. You don't offer any care services or support to them. They live independently, and you're renting the beds to them, not the rooms. So in one room you can have two beds, and you're renting a house. They have the one they call sober living, whereby those people who are coming back from addiction recovery and all of those stuff, you can house them. And even people coming back from correctional facilities, you can house them, and they can pay you because I think what they call them is I've forgotten the name, but it's just like they're trying to start their life all over again. So there are so many ways that you can make money from, just having your property there. So the non-medical, if you don't have any experience, I would advise you to start with the non-medical. Then I'll have to structure the non-medical for you in such a way that you can be running it, offering services, and making a lot of money, even just having it in one location. So that's what it is. There's so many things you could do. There's so many that I can't even remember, but yeah, there's so many you could do with that is not medical. I think that answers your question.
Yes, I think so. Again, if you can share your chat, your contacts, Mr. Francis, Mr. Lobbs, in the group. So anybody that wants to follow up can follow up with you guys. And I also have their contact. If you guys miss it, you could text me. Because many of these conversations, we don't have enough time to talk about it. And everybody's situation is unique. But thanks again. We'll be wrapping up. Thanks again for joining me on a Sunday evening. I know it's a day of rest, but you guys are taking time to invest in your future and learn something. And I hope it was worth everybody's time. Again, if you have any real estate question, anybody that's thinking of buying, selling, investing, I'm your guy. I enjoy doing this. I do this full time. And I love to help people transition into investing as someone that I've done myself. Building wealth is big for me, and I think it should be big in the African community. And that's what drives me. So thanks everybody again for your time, and we'll stay in touch.
Thank you,
I'm
Tolu.
going to leave this open a little bit just because we have messages so that anybody else will take time to save contact. So I'm going to be here for the next 2 minutes. But yeah, if you don't have any more question, you could leave and we'll stay in touch.
Thank you again.
Yeah, you're welcome, Dami. Bye.
Hello and good morning.
It doesn't feel like much fun to me either, but you get to live with these lovely people. And that gets a bunk in quarantine, right? Besides, there's nothing we can do.
Right.
Thank you.
Okay, guys. Bye, everybody.
Next week, see you.